everyone, and happy Friday. Welcome to Trader Tales with IBD. It's your host here, Alissa Coram, and excited to be joined today by Jim Roppel, seasoned CanSlim hedge fund manager. Jim, always great to see you. Happy Friday.
Great to be here. Great to see you.
Yes, awesome. So let's talk about your thoughts on the current market, some stocks on your radar, and then we will also give everyone a quick preview of our talk that we are going to have at the upcoming MarketWatch Best New Ideas in Money Festival. I'm super excited for that. So we've got a lot to cover, but I have a feeling that it's going to be a fun next couple of 20-30 minutes. So what do you say? I mean, you always exude optimism, so I know this is going to be a fun segment.
Let's fire it up, girl.
Let's do it. All right, and hello to our audience. I'm looking at the live chat here, so keep the questions and comments coming, and we'll try to get to some of those. But first, Jim, let's kick things off with your take on current conditions. A pretty compelling day of market action to cap off this short week. So a lot has changed from Tuesday to the end of Friday. What are your thoughts on where we're at in this market?
It's not shocking, the percentage move. In other words, if you're short and the market's going up, you're losing. It's like the fear comes in by the shorts and they have to buy at any price to cover. What is shocking is the lack of volume. I think today on the S&P or the New York was one of the lowest days in a couple of years. So we've rallied for 3 days. I don't believe it's changed the intermediate, short, or long-term trend. I think they're all down, and it just looked like a regular bear market rally. The S&P got above the 50. The NASDAQ is above by a tiny little bit. If Bill was here, I think he'd go, well, what are you talking about? All three, market trends are down. We just got barely above, and we're in a bear. So look, I'm short-term negative on the general market. It's very hard to discern if a new bull is started, but if it is started, there is a huge lack of opportunities, which really causes a lot of crowded trades. I looked you tweeted this out, and I looked at the comments, and somebody said, ask Jim why LI failed.
Yeah.
Well, LI failed for two reasons, but one is very similar to the current market. It had all of the variables that I would look for. It had everything. The problem was it was the only name.
Right.
And everybody who uses this methodology was crowded into that. And it wasn't like an uber liquid name. It wasn't like a Microsoft where Fidelity would come in and say, oh, you guys want to sell 5 million? We'll take it all. And so and then the second reason LI failed was the Chinese market really, I wouldn't say it imploded, but I think it fell around 15 or 20% since that time. So the general market, I'm fairly pessimistic with a very open mind, but I think we're setting up an enormous opportunity. The biggest money for me has been made after a bear. And you want to count the bear starting when the AD line rolled over in March or January, February of 21. You want to count it at the all-time high. No matter what, we are deeply into this bear. And I'm a big copycat. Tom Lee did a study, and he said most bear markets are equal about 25% of the duration of the prior bull. So we just had an incredibly uber short bull market. So I'm super flexible, and I'm ready to have. I think the conditions are priming themselves to have a year where, a hedge fund manager could be up 50 or 100%, and somebody's running their own little account could be up 2 or 3. I mean, a really skilled person who has their own personal account could be up a couple 100%. We're getting there. I mean, if you were pulling a rubber band apart, you'd be going like this. It's getting really taut.
Yeah.
So I don't want to be too bearish, but it's a lot of stocks will break out and then they'll stutter. Yep. They'll stutter right at just above the pivot, and then they'll roll over and get killed.
So,
go ahead.
Yeah, I was just going to say, so clearly looking at a stock level and the setup level, that is a huge indicator of where we are at if you are starting to see a lot of setups that fit your criteria, and not only that, setups that work. And in addition to that, seeing the major indexes improve. So let's talk a little bit about that. What would it take for you to really start putting the pedal to the metal and getting aggressive? If we are seeing the setups, do we need to be above the 200-day? Would you get aggressive before that if you start seeing setups that are working?
It would be a combination, like a matrix of, we have Shockwave and End Phase and maybe Chipotle and what else? Celsius.
Mm-hmm.
If we had 30 names like that, in the beginning of a real bull, there are so many coming out. I'm going, well, I'm not sure. This looks TML quality and this is acting great. What really has the variables? There's so many. You are struggling to divine which one's proper. So if that were to occur below the 200, I'd say the opportunities are there. But we really need to clear, I think, 13,161 on NASDAQ. That would make it, so right where the market got popped when it tried to get to the 200, it rolled. Mm-hmm. If we cleared that, so look, you could draw a line off the ultimate highs over that 13,161.
Yep.
We're just a big downtrend.
Yeah,
straight down. So
very clear resistance there.
Now, if we clear that, and there's a plethora of ideas, like we're going, ooh, which direction should I go? It's on. And when that happens after this big, I said, I want to say a big bear. This isn't your garden variety bear. I'm going to overstate the case, but something along the lines of 50% of stocks were down almost 50%.
Yeah.
And there was a huge...
And growth stocks are really taking a brutal beating during this time.
And, I did a study many years ago. I think I did it in 2000, and I went back like 50 years. And I did it use some of Bill's data, but I proved that I just looked it up a minute ago, 2.4% of past leaders reassert themselves again. And it sometimes, of that 2.4%, it takes 10 years of digestion to recover and go. So if you're looking at Square and basically anything with overhead where a stock's down 50 to 80%, here are your odds, 2.4%. So get out of that junk heap. And, I just don't like those odds. So the point is, the severity of this bear has caused an enormous compression squeeze. Mm-hmm. And so I think the opportunities are going to be really, I'm 57. How many more times am I going to see a chance to double through my net worth in a 9 to 24 month period? 5 or 6, maybe 10 in the balance of my whole life, assuming my wife doesn't kill me.
Yeah. So we got to be at the ready, but at the same time, I love that you are saying basically that you're being patient. I feel like sometimes we can get caught up in, the day-to-day of, a daily rally instead of taking a step back and looking at the big picture. We are seeing some promising action and some stocks working well, like you mentioned, the End Phases, the Celsiuses, the Shockwaves, that you can count them on one hand. But you have the confidence to wait and to really know when your sweet spot is to be aggressive. So I think maybe for some of us investors out there who might have this FOMO right now, it seems like taking that step back is something that really is going to pay off, because it puts you, talk about being in the right frame of mind at the beginning of a new bull after a bear, like you're saying, because that sounds like a very huge opportunity that we could be coming up on. We don't know exactly when. It seems like will.
As sure as the sun comes up tomorrow morning, we're going to get into a rockin' bear, and people
rockin' bull.
Rockin' bull. Oh my God.
We're so used to having bear this, bear that, But we'll get a rockin' bull.
People have forgotten what's possible in a bull market. Pull out a chart book of the greatest winners in history. Rest assured, I make this quote all the time. As long as the golden goose of capitalism isn't suffocated by socialism, you can bank on more Teslas, Ascends, U.S. robotics, Green Mountain Coffee. They're never going to stop. And yes, everyone should have the confidence in this methodology. I mean, assuming it agrees with your nature and you have some emotional control and discipline, because here, you brought this up just a second ago. If you're using MarketSmith and you're scanning or Wanda or whatever you're using, you're always going to go straight to the leaders. There'll always be leading stocks, but that doesn't mean you should engage. So this year, there's been 2 trades all year. 2.
Energy.
Short. Energy and boom. And oil and short. If you were anything other than energy and short, you were down.
Yeah.
Pretty much. So if you are always using software that's identifying leaders and you're continuing to go and swing that bat, you're just digging a hole. I mean, if you're in a hole, stop digging.
Mm-hmm. Yeah, I know. That's a very great way to put that, Jim. So in addition to the couple of stocks that you rattled off a little earlier, are there others that you have your eye on, or one of those that you want to take a closer look at? Because even though you're being patient, it doesn't mean that you're not making some pilot or test buys at this time, just to have a pulse on what the market is doing and be ready. Is there something that we should be taking a closer look at for the audience? Something that you've played recently?
I bought some AXSW, or what's it called? ASXM I bought today. And, it just seems like society has more people, more children who suffer from depression. And maybe the market, the total addressable market for depression is enormous. Yeah. And these guys just received an FDA approval for a new depression drug, which caused that massive gap up. And it has an up to down volume of, do you have up to down volume on?
Not on MarketSmith.
Yeah, you do. It's 2.2.
Oh yeah, we do.
And it right. It was, I think it was 4 a week ago. And it also has an SD rating of like 97 or 8, which is a measure of the percentage of the float that turns over daily, which really basically is just showing you, is this a weekly you're looking at?
Yeah, I'm looking at a weekly. That's the one. I knew when you were on IBD Live, there was one rating that you were looking at on Wanda that we didn't have. Sorry, I was like so quick to dismiss. So yes, the up down is right here, but it's the SD rating that we don't have on here. But now, anyway, I'm on a weekly.
Risk. Go ahead.
I was just saying I'm on a weekly, and the ticker is AXSM. Go ahead, Jim.
Well, it gapped up massively on the news of the FDA approval, and then it's digested, and I bought the gap, and then I had to trim some of it out because I paid up for it. I'm still profitable on it. But if this thing comes out of the top, and look at the volume dry up on that as it came down in relation to the explosion in volume up, 99 RS, total addressable market, enormous. And Bill talked technicals 90% of the time, 95. But if you talk to him one-on-one, he'd go, oh, well, I'm a fundamentalist. I'm more fundamentals.
That was like a given. So it's like, okay, that's all given. Now let's drill into the technicals almost.
And so now the big issue is you have single stock risk, which is exponentially or asymmetrically to the downside. I mean, I had a stock 20, 30 years ago called Senecor, received the FDA review committee's recommendation for approval, which is what these guys have. And then the full FDA review FDA board declined it. And the stock went on the recommendation. It went from 18 to like 60 or 80. And on the decline, it went down to 4. So the single stock risk is enormous. So you could look at XBI, or if you want to lever up LABU. And there's all these little tiny flee of biotechs, which are ripping, but their market caps are in the vicinity of their micro caps.
And very speculative on the fundamental side, like you're saying. Yeah.
I mean, these guys have no earnings or sales. They're basically laboratories with rich people who have funded the R&D. And if they don't get an approval, they're going to zero. But there's a group move here. Like there's a recognition by Wall Street that there's value here. And the whole group is starting to move. Although it doesn't look perfect here, it's kind of mucked up by a few bad ones. Yeah. There's a plethora of mini biotech. So I think you could go either way. But again, in the environment we're in, you could have breakouts and the market will pull it right back down. Like a basketball underwater, they'll run up because there's so much bullish activity, but then the general market will smash it back down.
Mm-hmm.
And that's what we're seeing. And that's where people are getting chewed up. And that's why patience is so important. Like, don't FOMO here, okay? If we cross that 13,161,
and you can have FOMO. Or wait, that's what we say. Wait for, if you want to have FOMO, wait for market conditions that warrant having FOMO, and have that wind at your back.
You haven't missed anything if you wait for the market to prove to you there's a durable uptrend at foot. Like, it's pure FOMO and fidgeting that has people wanting to engage here. Darvis would say, or Livermore would say, I'm fishing. Darvis would say, I'm going on tour. I'm just not going to monkey with this.
Yeah.
I mean, you can probe a little bit, but even with tiny little positions, you can knock yourself down 0.5% a week. That adds up.
Yeah, it really does. So we'll see if we can break out of that downtrend, get above the 200-day line and this high from a couple of weeks ago. Also, what about stacking moving averages? I know that was something that we were really keying off of, especially in 2020, but also 2021, those power trend kind of environments. Are you using those stacking moving averages at all to know if you really should press on the gas or ease up?
Well, I heard, actually, I tuned in to listen to Charles this morning on your IBD Live.
Yeah.
And I heard you mention both of those terms. Like, what are they talking about? I don't know what they're talking about. But the point is, until you're in a bullish alignment with all three, and Bill rarely talked in when I listening to him, the 21-day, but until all three indexes are trending up and the market's above them, we're not in a durable uptrend yet. And so, yeah, I really, really, really pay attention to that. And we're nowhere near bullish alignment right now. I mean, I want to go back. Like, there are so many stocks. Like, I have this newsletter called,
Yeah, you do. Growth Stock Mentor.
Yes, that thing. And I do it every week. And I go back and I look at it. And I'm like, look at all these great ideas I put in here. Writing and talking are easy. I look at them, like, look at those ideas. They're all, but then actually acting on them and having the emotional control to do it right and the conviction is a whole nother world. There are great, brilliant writers and research analysts, and they couldn't trade their way to a paper bag. It's not enough to have the idea. It's knowing when to implement it and then how to handle it once you are in it. And why are so many brilliant people, like brain surgeons and NASA engineers, terrible at trading? Because the slide rule doesn't incur emotions. You put a position on that's really meaningful to you. You got 20% of your whole net worth in one idea, and it's up 20 or 30%, and you've just made more money than you've ever made in your life. And what do? You go, I'm going to reel that in, because you don't have confidence in the system or confidence in yourself, and it goes up 1,000%. Or you're up more than emotions wreck everything. So just because you have a lot of great ideas rolling around doesn't mean it's time, and it doesn't mean you'll make money. There's so much more to the equation.
There really is. And Jim, you've been in that position firsthand and have had huge success riding big waves of those true market leaders. And so I think that's a great segue into just giving the audience here a little taste of the conversation that you and I are going to be having in a couple of weeks in New York City. That's right. Jim and Allie and some of the other team members from IBD, we are going on a little bit of a road trip to New York City for the MarketWatch Best New Ideas in Money Festival. It's happening September 21st and 22nd. There is a free virtual component, but also if you are in the area, there is an in-person option as well. And so we would love to see everyone. On the YouTube description, I have the links and the codes for everyone to use. So we definitely encourage you to sign up for that. But Jim, we're going to be having an awesome conversation. I'm going to really pick your brain about how it is that you have been able to ride the wave of those huge winners, because I think that's exactly right. It's only part of the equation to have the rules and have the timing to get in, but it's how you handle the trade beyond that that is something that I think you've really mastered?
Well, I've screwed it up a million times too. I honestly.
What, you're not batting 1,000?
Well, I mean, but here's the thing. In my whole net worth is predicated off of about 8 stocks. I've been doing this for 30 years. Okay, so every 2 or 3 years, I'll catch a stock that goes massively. And in between, I might not do very well. But I have been at the wheel a few times when at the beginning of a bull run, I got positioned right at the right time and in very big size, and they went. But so I kind of want to give you the message. If anybody's having a rough year, who cares?
Yeah.
Figure out what you did wrong. Maybe you were over clicking the button, but don't. Rest assured, those monsters are coming. And with an experience of learning how to handle these giant positions, you can absolutely change your life. I mean, I know people who are listening are going to absolutely change their lives coming out of this.
They will, yeah, because I mean, step one, if they're staying in step with the market to be, actively engaged during a bear and tuning in and listening to the great words of wisdom from a seasoned expert like you are, who has a stellar track record. Go ahead.
You're talking about somebody else. I mean,
no, this is you have the humility, which is something that Bill O'Neill had as well. But I think that's pretty incredible to put the numbers to it. 8 stocks, less than 10 stocks that can really change your life, and it's all about handling them right.
It is, and I guarantee you, people are being trained right now to be so bearish and so negative that as soon as they get gains of 10, 20%, they are going to whoosh. They're going to be able to say, I can breathe again. I've recouped a little bit of my losses. And these names are going to go on giant. And I've changed as a trader. I'm not a trader. I don't like that word. I'm an investor. My objective is to build a giant position in 3 or 4 real TML quality names just after a bear and sit my ass down for the average of 97.3 weeks through 5 or 6 beat and raise earnings quarters and make a killing. I mean, no, that's a giant oversimplification, but
still, those are some good notes to be taking, audience.
That's how you get rich. Okay, buying a breakout or a bounce off a 50-day and taking 10 points or 20%, not moving. Bill O'Neill didn't grow to the wealth he achieved by taking tiny little bumps and pennies.
Traded around positions, but that's different.
That's a big key to relieving the pressure without exiting your whole position. You make it like the NASDAQ got about 12% over the 50-day in this recent rally off the lows, which is historically really big. And the reason I bring that up is when you know your new TML is historically over the 50-day by an average amount, you need to start hedging or trimming, but never dislodge your low-cost stock. And that will allow you to sit through the inevitable pullbacks. Most TMLs are going to retrace to that 50-day 3 to 6 times a year, unless they're true monsters that will never break it, but they'll almost all pull back down to it. The pressure is too big. Okay. I mean, so there's a lot going on there.
Exactly. Yeah. Well, that's just a taste of the conversation, Jim, that you and I will be having in New York. So I can't wait to see you in the Big Apple.
Looking forward to it. We got 2 IBD live and then
yes, exactly.
All right.
Yeah. Yeah. So that's the other thing. I was just going to, Jim is also going to be on IBD Live with us on that Thursday, and that's also when we have the fireside chat, I guess we can call it. So check out that agenda. I did put a link in the description to this, but sorry, Jim, what were you saying?
And then we're going to do something in Vegas. We're going, what's that called?
I wasn't invited, I wasn't invited to Napa. I wasn't invited to
that's
Vegas.
It's the reload of the Napa thing.
Yeah. Next year.
Talk to the boss.
I know.
You worked hard today. 4 seconds.
I know. Maybe you can put in a good word for me.
No,
it's okay. I'm super busy. But I would love. I like Vegas and I like Napa. So what I'm gonna do, Jim, is I think next year the founders event should be at Pinehurst. What do you think about that?
I'm buying what you're saying, girl.
Party at in the golf country.
I'm all about it.
All right. Well, let's make that happen. So yeah, you have a busy couple of weeks, and we're super excited that you'll be in New York with us, in Vegas with us, and it sounds like you'll be sprinkling in some other fun trips and events soon. But we know as much fun as you like to have, you're also going to be keeping tabs on the market, and to be able to, even though you're a little cautious on this market here, and rightly so, seems like you're going to be at the ready to put your foot down on that gas pedal if and when it's warranted.
I think it's a huge mistake for people to go, it's a bear market, I'm giving up. I used to track the circulation of the paper. It used to be on the front cover, and I charted it. And when it got really low, I'm like, people are canceling their subscriptions the dead wrong time.
Contraindicator.
We haven't had that inflection moment. Like, I think, if you look, I was talking to a really famous billionaire trader. I had dinner with him the other night in Market Wizards, option guy. I'll just say it's Tony Saliba. And I was discussing the put to call in the VIX and why it hasn't spiked. And the bottom line is the VIX hit 85 in the 20 low in March 20. Okay. The put to call hit 3.5, and the equity only hit 2.3 or 2. I don't know what the heck. We haven't even come remotely close to that. People are buying the dip. Meme stocks went to crazy cuckoo Mars 2-3 weeks ago.
Yeah.
That is not. How about this? I don't like the odds. My odds of this market bottoming for real without those three variables rocking are about 10%. So there's in my assessment, a 90% probability that the market has not seen its bottom until those three secondary, tertiary measures ring. And so I just compound that with the MAs being not in alignment, not enough leadership, no volume on the rally. I mean, if Bill was here, he would probably say, Bill controlled the exposure for all the PMs. He'd have these guys locked down to single digits probably. But he could change from single digits to 50% long in 5 days. 3 days, and he probably could have these guys on margin in a week or two.
Yeah.
So don't give up when it looks ugly. Stay focused. Keep those watch lists jam packed with fresh merchandise, and don't get too negative.
Yeah. Those are some great words to end on. We could definitely go longer, but Jim, we'll have to leave it there. And we really hope everyone tunes in to not only IBD Live in New York, but also our conversation that'll go into even more detail on how to ride the wave of winning stocks. So I'm really looking forward to it. Jim, thanks so much for your time today. It was awesome chatting with you. Hope you had a great round of golf today. I guess to fit in a viewer question, Mike is asking what your handicap is. I am a 6, and it's harder to play at a 6 than it was at a 9 or an 8. Yeah, because if you're in a tournament, do you get any strokes if you're playing in a tournament? I'm usually giving them. I mean, almost always. I'm playing the member tomorrow. Closing member. What's your handicap? I just started being able to keep my score. So margaritas are your handicap. That's where we're at. No, I'm having a lot of fun with it. So I'm getting better. So, but I'll hopefully, I don't know, by the end of the year, hopefully I'll have an answer for you. I just started playing this year, so. Right. But it's been a lot of fun. All right. Well, thanks so much for tuning in, everyone. And we will see you back here next week. Thanks for watching.